Hello, this is Professor Sescolini again. We are going to talk about Chapter 1. This is an introduction to adjusting and business. Actually, it should say Introduction to Business and Accounting. We're going to talk about this chapter. Chapter 1 and 2 are probably the most important chapters as we go on. So just keep that in mind. I will talk slowly, give you time to pause the video. These videos are in place of my face-to-face lecture that I give. So first of all, we need to talk about business. So the true definition of a business is any organization in which resources come together like materials and labor, and they're put together to provide goods or services to customers. The main purpose of business is profit or to make money. So profit is the difference. It's considered the difference between the amount of money you spend compared to the amount of money you make. So as long as you spend less than you make, you should be good. There are only 3 types of businesses worldwide today. There's a service business, which only provides a service and not a product. And by the way, we will be talking about the service business from chapters 1 through 4. When I get to chapter 5, we're going to be talking about merchandising business. Most people will always understand this because chapter 5 talks about buying and selling a product. And the other type of business is called a manufacturing. We will not cover this in 1A accounting. This is a 1B topic. This is when you actually make product. So briefly, I'm going to talk about the role of accounting in business. This is not something I actually test on, so I'm going to go quickly over it. So accounting, if the definition of accounting is an information system that's going to provide reports to users about the conditions of the company and what's happening in the company. And so some of the processes to understand accounting is you need to know who the users are, what their needs are, what information do they need to see, and design a report so they can understand what they're seeing, record it, and prepare it. So again, I don't test on this, so I am going to go through this quickly. Here's a little flow chart that just shows the accounting as an information system with the different steps. Now, first, we're going to talk about managerial accounting. Managerial accounting provides information to managers and employees. So we are not doing managerial accounting. Managerial accounting is usually the 1B class that you'll take after completing this class. Financial accounting, which is the class we're actually taking, provides accounting to external users only, such as investors, creditors, government. So the object of financial accounting is to provide relevant and timely information to people outside of the company. Managerial accounting provides information to people inside the company. So this is just a little introduction to accounting and business. And now we're going to talk a little bit about ethics and business. Ethics plays a very large role in business since literally you are basically dealing with pertinent information that has to do with financial gain. So if you have high ethics, that doesn't sound right. If you are very ethical, that's really, really important. You want to hire people who have really good ethics. Now here's the problem. You really don't know who does and who doesn't. So you have to basically find some way to figure out who to hire that has the high moral and ethical standards that you need for decision making. Because ethics are the principles that guide all the conducts of the individuals. Here's just a little example of 5 businesses that you may or may not have heard of. I'm sure most of you have heard of Enron. Okay, and all of these companies had problems. Here's what the business or the accounting fraud was. fraudulently inflated its financial results. What that means is Enron told the world that they were doing great when in fact they were not. So their stockholders believed that they were doing great and people would buy their stock and invest in their company. And what happened was they basically went bankrupt. People lost millions and billions of dollars, 60 billion in the stock market, and the senior executives actually got punished and was sent to prison for their crimes because they purposely committed a crime. They purposely withheld information. So with these 5 companies, you only need to ask this question: what went wrong for these people? There's only 2 answers to this question. Okay? Failure of individual character. In other words, the individual itself made bad decisions. Or culture of greed and ethical indifference. Means the whole company set the tone to be greedy and they did not care who they hurt. Because of Enron, a very important law was passed in 2002. I do not test on dates, guys. I do not test on certain things, but a very important law called the Sarbanes-Oxley Act was passed in 2002 because of the Enron. And what happened was it established a new oversight body called the Public Company Accounting Oversight Board, and it established new standards for corporate responsibility and disclosures. Because you have to understand that these companies have to disclose to their stockholders relevant and important information and valid information in order for stockholders to make decisions about investments. So finally, the role of ethics in accounting is, here's basically what's really going to happen. If you have an ethical issue, these are the guidelines you would follow. Okay? I don't test on this. You can take a look at this, but realize ethics is extremely important in business. So this concludes our introduction to accounting and business and our ethics role.